explain what you're talking about here.
Yeah, so last week was capital loss harvesting, taking a position that's at a loss, using that loss to then offset other gains that you have. Sometimes it makes sense, sometimes it doesn't, depending on the situation, the tax savings, market value, and everything. But this time it's, well, capital gain harvesting. Not talked about as much, but capital gains are taxed differently than other types of income. You have your 0, 15, 20% capital gain tax brackets, but in some cases, you're able to realize gains intentionally, so realize that income because you might be able to do that in a lower tax bracket. So, for example, a married couple, standard deduction is a lot higher now this year, and itemized deductions, I think, are going to be more prevalent with the repeal of the SALT cap. So, a married couple can have an income over $150,000 while still being in that 0% capital gain bracket. So that means they can sell something, realize that gain, pay no taxes on it. And with capital gain realization, wash sale rules don't apply. That only applies to losses and then buying it back. So what that means is you can, sell something, realize that gain, and then buy it back immediately. And what that does is it resets your cost basis, essentially tax-free potentially, if you still want to hold that investment. So it can be a benefit, especially if you're looking at the end of the year. If you've got some room in a given tax bracket, might be worth it to realize some things, take advantage of the low tax environment that you're in.
And this is so important for people to understand because there can be benefits to it, but you have to know what you can do, what you're doing.